You know, everyone keeps telling you to buy mutual funds, buy index funds, buy this company's fund, but has anyone actually told you what a mutual fund is? Keep watching and let's learn more. Hey everyone, it's Elian at Project MoneyTV. Now today I want to build on the last two videos that covered stocks and bonds, and I want to introduce you to mutual funds. If you haven't had a chance to take a look at the first two videos, I highly recommend you click the link in the description below and watch those videos after, as it's all going to build up to really give you a foundation on investing. So with that said, please subscribe to the channel, as we're going to be covering a lot more topics dealing with your money and your finances. So what is a mutual fund? Essentially, a mutual fund is a professionally managed investment company. This professionally managed investment company pools funds, aka money, from a lot of investors, and it invests those funds along set guidelines or a predetermined investment strategy. So when you invest in a mutual fund, you essentially give the mutual fund company your money in exchange to participate in this collective pool of funds and the investment strategy associated with it. Now, there's three major types of mutual funds that you can invest in pretty easily. There's stock funds, bond funds, and balance funds. And as the name implies, stock funds invest primarily in a collection of stocks, bond funds invest in a collection of bonds, and balance funds invest in a collection of both stocks and bonds. Some mutual funds invest in other types of assets and even more complicated strategies, but for the purposes of the video, let's just keep things simple with stock, bonds, and balance funds. So why would you want to invest in mutual funds? Well, mutual funds provide a couple benefits that you get over investing in individual stocks or individual bonds, namely diversification, ease of access, meaning that you can invest with smaller dollars, and professional management. So what do we mean by diversification? Well, imagine if you bought one stock and that one stock went up in value. You're going to feel pretty good and your investment has increased. But if that one stock goes down in value, you're not going to feel that good and your overall investment is going to decrease. Now imagine if that stock went down to zero. Your investment would incur a total loss. Now a mutual fund will buy a bundle or a lot of individual stocks or individual bonds, and ultimately it reduces the probability of a total loss. But keep in mind, just because the mutual fund is diversified, it can still go down in value. Increasing returns are not a guaranteed thing. Now, another advantage that I had mentioned was ease of access, meaning that you can invest with less money. So think of it this way. To buy individual stocks, you typically have to invest a couple $100 and sometimes even a couple $1,000 to make some of the fees worth it. If you buy individual bonds, you typically have to invest in larger quantities, ranging from a minimum of $5,000 to $10,000 and up. Now, if you buy a mutual fund that invests in the S&P 500, meaning the 500 largest stocks in America, you can invest in that mutual fund with as little as $100, or a mutual fund that invests in the Barclays aggregate, which is a collection of bonds, again with as little as $100. If you wanted to go out and buy 500 individual stocks, even if you only invested $100 per stock, to be allocated and diversified amongst those 500, you'd be looking at a minimum of $50,000. Now, I also mentioned a potential third benefit in that mutual funds are professionally managed. Mutual funds can be passively managed or actively managed. A passively managed mutual fund is one where the fund manager tries to mimic a specific index, whether it's the S&P 500, the Dow Jones, the Barclays aggregate in the case of bonds. They put little work in as far as picking individual investments, and they focus more on keeping the fund in line with the index. An active manager puts in a lot more work and a lot more research in trying to select investments that will beat a specific index or a specific benchmark. Now, I also want to bring up that mutual funds do carry management fees because these professionals do get paid for their efforts, and an active manager because of the added work that they put in, does charge more for their role than a passive manager. And keep in mind, sometimes an active manager can charge a lot more than a passive manager, and an active manager doesn't always beat their index. Now, on the topic of fees, mutual funds are investment companies, and just like any other company or business, they incur operating expenses and operating costs. So they do charge fees for managing their funds. As I mentioned, actively managed funds tend to have higher fees, especially those with very specialized strategies. Things like actively managed strategies in China or India often come to mind because they have higher teams, greater research breadth, and they often have high travel costs as well. Passively managed funds that focus on mimicking an index tend to have lower fees. And oftentimes, if you look at the funds offered by, say, Vanguard, Charles Schwab, Fidelity, all the major brokers, they tend to have some of the lowest cost index funds available. In general, I think mutual funds are a good starting point for anyone who wants to get their feet wet and get some experience with investing. It takes a lot of hard work to pick individual stocks or individual bonds. For example, do you know if Disney's going to compete with Netflix in the long run? Is Verizon going to be able to fight off T-Mobile in the long run? Google versus Apple, Coke or Pepsi? I mean, I don't know which stock is going to outperform which, but you can invest in all of them cumulatively through a mutual fund. And before someone says you can also invest in ETFs, yes, you can. And we're going to cover those in our next episode. So stay tuned, subscribe to the channel, hit the like or dislike button, share with your friends, and comment below. I'll make my best efforts to respond to as many comments as possible. Thanks a lot. I'm Elian, and you're watching Project Money TV.